Stock option trading for beginners. Get ready for stock market corrections. Now we are in a bull market, but a correction can happen. What could cause a stock market corrections? I'm going to tell you 5 strategies to profit for stock market corrections and a very important bonus strategy at the end of the video. Last week from June 1st to June 9th, within 7 days I made over 1,200. In stock investing and stock option trading, it's very important not to listen to news. Usually news media report bad news because bad news sell advertisements. The more people read news, the more advertisement they can sell. Look at this. Morgan Stanley's Mike Wilson predicts double-digit percentage drop will hit stocks in early 2023. Let's look at it. In S&P 500 year to date, where was double-digit drop? Nowhere. S&P 500 jumped 13.46%. It means if you invested 1,000 at the beginning of the year, you will have made over $130. If you invested 10,000, you will have made over 1,300. It's like free money. Within 6 months, where was the double-digit drop? Double-digit means 10% or higher. Nothing. Of course, the stock market fluctuate going up and down. It's very normal. Look at Nasdaq. Year to date, where was the drop? Nothing. If you had listened to the news and never buy or sold stocks, you will have lost money. But if you never listen to the news and bought Nasdaq, you will have made 29.6%. If you invested 10,000, that means 3,000 profits for just not listening to the news. So never listen to the news. How about Dow Jones? It did not drop 10%. Of course, Dow Jones did not move so much because Dow Jones performed the best last year. Nasdaq was the worst performer last year. Like I said before, Nasdaq is now the best performer this year. It is very normal. Now I think a stock market correction is coming. Why? It's official. We are in a bull market. Let's look at that. All the news media outlets are starting to report that we are in a bull market. Last year, October 2022, I was telling everybody that we started to have a bull market. Nobody believed that. Every news media reported we're gonna have a big drop, we're gonna hit another bottom again and again. Nobody believed the start of the bull market. Remember that. Now everybody's thinking we are in a bull market. I believe that we're gonna have a pullback or a stock market correction. A pullback means a stock market drop about 5%. A correction means a stock market drop above 10%. And there's another reason why I think we could have a stock market corrections. Hawkish Fed could kill baby bull market rallies. One Federal Reserve speech on Wednesday, they could say we are stopping a rate hike for a while, but we may raise the interest rate again anytime in a hawkish tone. Or they could say we need to raise one more time. In that situation, a stock market could pull back a little bit, but that's a big opportunity to buy. And a lot of the rich people, they have so much cash on the sidelines, they may see that this is an opportunity and that pullback or stock market correction may not last. That's very normal. But in stock investing or stock option trading, it's better to look at data. Don't read the news. Reading news is just for entertainment. So I look at the data. I'm going to show you the data. S&P 500, if you look at Bollinger Band, it's at the top Bollinger Band. So it means that it's extended. And look at ISI, it's 70. So it's overbought. So S&P 500 is overbought and it's overextended. When it hit the top, it's normal to come back down. Look at that. Hit the top, come back down. Hit the top, come back down. It's very normal. It's going up and down within the Bollinger Band. and not only S&P 500. Nasdaq is at the top of the Bollinger Band, then 69 ISI. So it means that it's overbought and it's overextended. It's very, very normal and healthy for the stock markets to pull back a little bit, then go up higher. I still believe that we are in a bull market. It will be very, very hard to break this bull market because last year we had a very, very terrible bear market. Let's look at Dow Jones. Dow Jones the same at the top of the Bollinger Band. ISI 60, so it's not so overbought yet, but it is overextended. So like breathing in, breathing out, whatever goes up must come down, whatever goes down must come up. Remember, stock market over the long run goes up. So we are in a bull market, so I'm still bullish about it. No matter what happens in the economy, no matter what the news media say, we are going to have a recession, we could have a bear market again. Whatever it is, just ignore the news. The most important thing is we make money. On June 12th, my unrealized gain is 2,590. So that's a lot of money. Normally, I prefer to have high unrealized gains because if you sell right away, I need to pay higher tax. But if I hold stocks for more than 1 year, I pay lower tax. So that's why I'm holding so many stocks. I'm not selling them yet. At the beginning of the video, I show you my realized gain. I just sold options just to finance my travel. I'm traveling around the world. So you may see higher unrealized gain because I'm holding stocks. Also, if you are holding stock, it's better to hold it for long term. Then you pay less tax. If you keep buying and selling, then you need to pay higher tax for that. Remember that. Why am I so bullish on the stock markets? In a 4-year presidential election, the third year is the most bullish market. 89% of the times is positive for the year, especially if the year before the third year is a negative market, that the third year is going to have positive 100% of the time, 100%. So that means this year we're going to have a stock market rally and positive S&P 500 this year. They are looking at the S&P 500 from 1950 to 2021. How reliable it is. Remember, we need to look at the data, look at the past. Remember, the past performance does not guarantee the futures, but it could be a very, very good indications of where the stock market is going. Another reason I'm bullish about stock market is the 5 years returns following the largest market declines. Usually we're going to have 5 more years of positive return. The first year, 70.9% average return. That's pretty crazy. Look at that. Since 1929, it's very, very good indications. Second year, 12.7%. Are you too late? No, you're not too late. The third year, 9.8%. The fourth year, 26.3%. The fifth year, 10.2%. So 5 years is all positives. Average annual 5 year to the return is 22%. If you invest in real estate market, it's considered very good to have 7% return, or 10% is already very good. But look at that, because we had a bear market last year, this is a very, very good opportunity to get 23% average return for the next 5 years. Does it mean that we're gonna get it? No, nothing is guaranteed in investing. In any asset class, nothing is guaranteed. But I believe in stock markets. I have stock investing and stock options trading experience, so I've been focusing on stock options trading and stock investing for the next probably a few more years. I'm not gonna be focusing my attention on real estate because I believe that real estate, commercial real estate might have trouble, and once the real estate market goes down, probably I might look at buying some real estate, but not at the moment. I talked about that before. Last year I wasn't interested in real estate. This year I'm not interested in real estate either. And another reason is a lot of high net worth investors are still holding record cash. There are two types of investor. One investor type, they know how to invest in the stock markets, so they are the early investor in the stock markets at the beginning of the bull market. The second investor types, they are still wait and see approach. So they may see, oh, stock market has been going up quite a lot, I don't want to miss out. Then they're gonna start pulling their money in maybe the later part of the 2023. Then in that situation, especially if you have bought stocks at the beginning of the bull market like me, then you will just sit and see your portfolio grows higher and higher. You just need to use options. You can sell call options using your portfolio. Remember, you need to have 100 stocks to be able to sell call options. Never sell call options naked. Remember that. 5 strategies to profit from stock market correction. Strategy number 5, hedging with QRD. QRD moves in the opposite direction of Nasdaq Composite. So if Nasdaq Composite goes down, QRD goes up almost twice, approximately twice. So it could be a very good hedging strategy. You may have a lot of stocks in your portfolio. You are worried that the stock market correction is coming. Probably you can buy QRD to hedge it. And of course, if you buy a lot of QRD and your guess is right, stock market corrects, then you could make a lot of money. Strategy number 4, buy put options at the top of the stock market before a corrections. Once the stock market goes down, put options goes up. That's very normal. But remember the risk of timing. You might be buying too late or you might be buying too early, then your put options expire. That could happen. Buying put options in the bull market may not be a good idea. Strategy number 3, buying call options at the border of a corrections. Let's say you missed the top of the market, now at the border of a correction, you can still buy call options. And if you buy call options, you start to see stock market going up and you buy call options, that you ride the momentum, that you could be making money. Just remember the risk of timing. You could be buying call options too early or maybe too late. Buying call options in the bull market may be a good idea because you are going with the trends. Never goes against the trends. Remember that. Strategy number 2, advanced options. Advanced option is a combination of call option and put option. You use both of them together to create advanced options. Advanced options have so many strategies to profit from any market conditions. That's why I love advanced option. Stock market goes up, you can profit from it. Stock market goes down, you can still profit from it. Stock market does nothing, you can still profit from it by using advanced options. Strategy number 1, dollar cost average. What does it mean? We buy great company stocks regularly. I can buy daily, I can buy monthly, or I can buy quarterly. If daily is too troublesome for you, you can buy monthly. Every time you get a paycheck, you buy stocks, then you spend the rest. Remember, never spend your first paycheck. Always invest. Only spend the surplus. Very important. Financial planning, personal finance. I don't like investing quarterly because it's very easy to forget. Maybe investing every month or every paycheck is very easy to follow and it's very easy to succeed. Bonus strategies. Just travel and ignore the news. A lot of investors lose their money because they read the news and they are afraid that their stocks gonna go down and they sell those stocks at a very bad price, then they lose money. So if you are a beginner, you don't know what to do, you know that you have good stocks, just ignore bad news. Just travel. Rich, but I don't have money. Don't worry, just watch travel channels. You can subscribe to a very good travel channel like Rich Freedom Dragon, International Travel Lifestyle. You can watch travel videos in the playlist. Just enjoy travel videos. Don't read the bad news. You're gonna lose money if you read bad news and sell your stocks at a very bad price. If you don't know how to do options, call options, put options, you can go to playlist and look at how to videos. I show you how to buy call options, how to buy put options, so many how to videos, and you can watch good for live videos. You can watch these videos anytime. It's gonna be useful for you. If you have any questions, comment down below, like, share, subscribe.